Hello everybody, it's Fergal from PFT. I'm going to make this video because I was asked a question about managing risk on the account. So what I'm going to do, I'm just going to take a quick snapshot of this live account. I'm just going to show you here, live 16. IC Markets, that's the server. This is our ring code chart from a live account. So the best way to explain this, because the system operates without a stop loss in the traditional sense. So we don't put a 30 pip stop loss on the trade. What we do is when the price goes against us, we trade in the other direction. So I'm going to pick out a few examples of where that's happened. Now, just look at the date on this. So these trades were done on the 20th of March 2020 on a live account. So started off trading here with a couple of sells. Those sells worked out. Then we went into a couple of buys. Now, so these two buys were entered into, and then all of a sudden the price goes in the opposite direction. So this is obviously, for these two trades, this is a loss. Now what happens is after the buy goes in the wrong direction, in this case about 28, 29, 30 pips, we start to sell in the opposite direction, and we've had multiple sells, and when the system will calculate the overall profit on the good buy sells and the good sell trades and the poor buy trades. So at this point, when all the trades exit, cumulatively we're actually in profit. The price moves on and we have a couple of sells. Now what happens here is the price goes in the opposite direction. So for this sell here, this is actually operating at a loss. Again, we go into sell or buys, in this case 35 pips after the sell is entered into. We do multiple buys. Again, overall in this position, when the overall trades that are in progress are profitable, all the trades exit at the same time, and this sequence is repeated over and over again, which is the way that the system manages risk. We've had a buy that didn't exit straight away, did a sell. The sell was a bad trade, but again, cumulatively the overall trades were in profit and the exit more or less at the same time. Again, a couple of buys here, or one buy, price goes in the opposite direction. Looks like there was a bit of a longer spread there on this, so there was a 50 pip movement there before we started to sell in the opposite direction. Now in this case, your drawdown is slightly higher than it normally is, but once the sells kick in, once the first sell kicks in, that means you're hedged, so your drawdown doesn't get any worse. So it's one trade offsets the other trade, and then when there's a cumulative profit, all the trades exit more or less at the same time. And as simple as that, that's how we manage risk. We don't operate with a traditional stop loss. However, we trade in the opposite direction when a trade goes against us. Price will never stay the same. So price will either go up or it will go down. It might range for a while, but eventually price will always, especially on this currency, the Great British Pound USD, price will always move out of the range that it's in. So the thought process is, at some stage, and it's always reasonably quickly in this currency, you get to an overall profit, and that's when the system exits. Profit could be small, but you're in profit, which is the really important thing. That's it for today. That's Fergal Tully, PFT, Pure Forex Trading. If you have any questions, you can always get us on our YouTube channel. Just do a Google search on YouTube for Pure Forex Trading, and there you can see all our videos. Okay, thank you. That's it. Thank you. Bye bye.